own meetings, right? Few minutes into the ride, he calls me and says that, hey, Sabby, one of my drivers wants a salary advance and a significant amount. I said, what happened? He says, no, his brother is sick, admitted in the hospital, probably in coma, right? They really don't know what's going on, but he's been hospitalized for the last several days, and they've run out of money, so he needs money. Can you get one of your doctors to talk to him and find out what's going on, right? So we did what we did, right, to help him in that case, right, or help his driver and his brother. But this is not a case in isolation, right? There are many or numerous such stories with just one moral here, right? And that is a single healthcare incident in the family can push you back into poverty, right? So that's important to keep in mind. We all know there is a gap, right? And the gap is that 2 in every 3 Indians don't have healthcare coverage or don't have adequate healthcare coverage, right? So as a result, what happens? Half of India's healthcare expenses are borne out of pocket, right? And when you look at rural India, the problem gets heightened even more, right? 8 out of 10 Indians in rural areas don't have healthcare coverage, right? And what is worse is that the medical expenses continue to escalate, right? Escalate at a very fast clip, right? So as a result, again, many Indians shy away from even going and doing basic health checks, right? And the numbers are alarming. 75 to 90% avoid doing a health check or doing a proactive doctor consultation, right? Just because they're afraid. What if something's found out? I won't have the money to bear the expenses, right? It's that fear that prevents them from being healthy, right? So while the MFIs, right, have done a fantastic job of financial inclusivity, right, we urge you to also look at the health of your borrowers, because we've been hearing the last few days about, since yesterday, right, about stress, about collections, right, about outstandings, right? And there could be several reasons for that. One of the reasons is definitely their health. If they're not healthy, it impacts their livelihood, impacts their ability to earn, and in turn, it impacts their ability to repay the loans in time, right? So that's the request that we have, right? But it's not just a question of affordability. It's also a question of access. When you look at rural India, right, 65% of Indians live in rural areas, right? But what about the doctors? 80% of the doctors live in urban India. So you see the dichotomy that exists here. So in effect, you have only 20% of Indians available, 20% of the doctors out of the 13.86 lakh doctors in India, only 20% of the doctors are available to cater to 65% of the population, right? So it's a question of both affordability and access. So what do we do about it? How do we solve it, right? Can we go and set up hospitals in every nook and cranny of the country? Can we set up clinics or e-clinics or whatever we call them, right, in the remotest parts of the country? A capex-heavy model is not going to be the solution. It can't be a tenable or a financially viable solution. So what is the solution then? It is technology, right? So digital healthcare can address this issue of access and affordability and quality, right? And that's where MediBuddy comes in, right? So what do? We are India's largest healthcare platform, right? Be in terms of number of doctors, medicine delivery, the phlebotomists who go and collect samples from your homes, or diagnostics, right? We are the largest, right, in terms of network. But we're also investing heavily in technology. How many, if I can ask for a raise of hands, please, how many of you have used Swiggy? Just very few? Okay, I see more hands going up. I would have expected that almost everybody's done that, right? So what happens when you get your food delivery in time, right? You go and check the app and you say, oh, the delivery partner is 2 minutes away. Or you say, oh, wow, 20 minutes away. What happened? What's wrong? So what do? Then you go and find out what's happening in the 20-minute case, and you go and take some actions. Maybe chat with the bot or the agent, or call them and find out what's going on, right? Similar to that, imagine if you've asked for a sample collection at your home. You're fasting since morning, and the phlebotomist is delayed. How nice is that, right? So imagine you or your customers, your borrowers, knowing that, oh, the phlebotomist is 2 minutes away, and there's nothing to worry. But if the phlebotomist is 20 minutes away, the ability we have is to take corrective actions proactively, right? Because we're working to improve quality healthcare, right? And provide a good customer experience, right? We've also recently been awarded a patent for improving online patient experience, right? So imagine a doctor consulting you online and being prompted, hey, you're too close to the camera, right? Or the lighting is not good. Ask these questions. Check about the history, the family history. Check about allergies, right? And then prompting you with solutions, right? How do you, with a network of 1.25 lakh doctors that we have, how do we ensure that we are consistently delivering high-quality services to our customers, right? We're investing in technology to do that, right? So what can we, or how can we help your borrowers? We can provide them online consulting. They can also go and visit a clinic or hospital and meet a doctor of their choice, right? And we'll take care of that. We can deliver pharmacy to 96% of the PIN codes in India, or they can go and pick up medicines from a store, right? We can have a phlebotomist go and pick up blood samples from your home, or they can go visit a diagnostic center, or we can organize health camps in your branches or where your borrowers are, right? We can also have MediBuddies on wheel going and accessing remote corners of the country, right? And providing those health checks at the doorstep of your borrowers, right? So there is a lot that can be done in this model, right, to address the health of your borrowers, thereby leading to lower delinquencies and lower NPAs and so on and so forth. So in effect, what I want to summarize is that, look, a single healthcare incident, right, can push your borrowers back into poverty. And that will impact their ability to earn, and in turn, their ability to pay back your loans in time, right? So while you've done a fantastic job of financial inclusivity and taking care of the financial needs, right, our urge is to pay heed to the health of your borrowers as well, because that will impact, in turn, impact us as well. So we are here at a booth outside. The team's spread out all over the place. So if you have questions and stuff, we urge you to come and talk to us and see how we can make India a healthier place. Thank you very much.
Thank you so much, Mr. Sabyasachi, for your presentation on digital health. Ladies and gentlemen, I now welcome you all to the plenary session 4 on Microfinance 2034, the future of microfinance in India. Please join me as I invite our esteemed panelists onto the stage. May I invite on stage the moderator of the session, the Professor M.S. Sriram from IIM Bangalore. May we also invite on stage Country Heads and CEO, Bank of Bahrain and Kuwait, B.S.C, Honorary Secretary, IBA, Mr. Madhav Nair. Very warm welcome to you, sir. May I also invite on stage ED Indian Bank, Shri S.B. Singh. Warm welcome to you, sir. Joining us now is MD and CEO, Utkarsh Small Finance Bank, Mr. Govind Singh. And we are also inviting on stage CEO Muthoot Microfin, Mr. Sadaf Sayeed. Very warm welcome to you, sir. May I also invite on stage Chairman and MD South India Finvest Private Limited, Mr. Natarajan. Warm welcome to you, sir. Few of the very vital questions that will be addressed in this session are as follows. What would be the microfinance landscape in the country over the next 10 years, and what kind of changes are expected for microfinance sector in MFIs in the next 1 decade? What role is expected to play by microfinance in the nation's development over the next decade? What key changes, transformations are expected in the microfinance sector, and how will they impact its effectiveness? Also, we would be discussing matters regarding how can past experience and lesson have learned guide the development of future policies for microfinance sector. With those words, may I request the moderator of the session, Professor M.S. Sriram, to kindly take over.
Thank you very much. Good afternoon. I will not stand up because if a professor stands up, he will go on and not stop. I've been warned by Gigi that I should not go beyond 1 hour in any case. Irrespective of when you start, you stop exactly 1 hour. So we'll try and stick to that time schedule. So as an opening remark, I'll make 2 or 3 points and then we can move ahead. One is, of course, we've been talking amongst ourselves as to what we need to talk about, and the topic given is looking ahead 10 hours, and all of us are worried about what's happening to us in the next few months with this broad heating up of the market happening. But nevertheless, two or three things that have happened in the inclusive finance sector, particularly in the group sector. I mean, this is my reading of the situation. One is, I mean, after demon and after COVID, the groups are not working as groups. I mean, groups are there, but they're much more of aggregation, transaction aggregation points rather than solidarity, this thing. So that's one breakdown that has happened. Second breakdown that has happened is that meetings themselves, because of COVID, sort of the, importance of meetings itself has gone into the side. And the people have figured out that you can still do the transaction without meeting. So that's the second thing that has happened. Third, from the time I got into microfinance till now, the data availability is so much, the transaction trend is phenomenal. So therefore, what used to be the special value addition that the group used to give, which is the embedded knowledge of knowing each other, that's now more or less available through data analytics and so on. And with fintech coming in, I think it will be much more, and data is going to play a much greater this thing. So in one sense, the basic edifice on which the concept of inclusive finance was built in the last 20 years is sort of crumbling for the good. When I'm saying crumbling, I'm not saying, oh, it's a building that is collapsing, but it is changing for the good. So in this changed environment, we need to now look at how we use the technology, but at the same time, not lose the human touch. And that is going to be the challenge, because ultimately data gives you everything. I mean, I can give you one interesting example. For the last year's New Year party, my sister asked me to go get some liquor. I went to the liquor store, bought some liquor, and immediately it said, do you want to convert this into an EMI? Now, that is where the data plays a role and human interaction does not play a role. Because there's an algorithm which says if the transaction value is beyond X, you should give an offer of converting into this thing. But if you were a human being, you would not offer, hopefully you will not offer a EMI on liquor. So that's something that we need to keep in mind, that how do we keep the human element of the counterfactuals and the nuance that is available only through interaction as we go along. So I'll start with Sadaf. Sadaf, while we were talking, you said that, why are we blaming the ecosystem? The highway is there, and if you're overspeeding, you're responsible for this. But how do you look at this ecosystem that is built for the future? Is it good enough? And how do you overcome this current speed breaker that has come in? And how do you look at it 10 years down the line? I mean,
Thanks, Sriram sir. I think, first of all, I think the regulator has its role, and they have played a very important role in nurturing this sector and building this sector the way where it is today, at around 4.3 trillion rupees of asset under management and 8.5 crore customers. I think what has happened with the liberalization of the regulation is, I think more than anything, the regulator has created a level playing field. And when I mean level playing field, it is not only within the microfinance entities, NBFC, MFIs, and banks or SFBs. It is like a level playing field uniformly for everybody who's in the ecosystem. I think that's very important to understand, because we keep searching for answers, and every time we come to this conference, people ask this question that when the microfinance will change into individual lending, or when there would be a new way to serve the customer, moving away from JLG and SHG. I think you rightly pointed it out that currently, I think JLG is serving a purpose of unit economics more than, I think, the cohesiveness of the borrower to repay, because I think the repayment kind of cohesiveness remains for one or two installments, and beyond that, it's very difficult to enforce JLG in the current scheme of things. I think given the situation, it is, I think the borrower who will determine, because RBI or the regulator has done that, it has created a level playing field. It has given an opportunity for all lenders to serve the customer. There was earlier a concept of JLG, which in the new regulation, there is nothing mentioned about JLG. So anybody who's lending to a household which is less than 3 lakh rupees of income, and it's an unsecured loan, it is kind of a microfinance loan. So all the players who are serving and providing service to this segment are a microfinance player. I think that is a kind of an advantage, but also that is a peril of the current situation also. Because of the advent of fintechs and ability to reach to the last mile, there are multiple options available to the borrower. And borrower, because her needs are growing every day, she is able to borrow from fintech, borrow from any sort of NBFC, borrow from MFI, and then borrow from banks also. So that is creating a little bit of an over leverage or overheating. But I think it's a transitionary phase as people realize that ultimately what is in the interest of the borrower, they will ensure that the leverage of the borrower is contained in a manner. From that perspective, I feel that blaming the regulator for opening the sector, it's like blaming somebody like a government who has built a nice highway for an accident. And if you're driving at a 150 kilometer per hour speed and you met with an accident, it is not the responsibility of the government or fault of the government. It is your irresponsible driving. What we need, what is the need of the hour is basically the traffic cop, which is the SRO. That role is very important. The traffic cop has to flag the people who are driving fast and has to take action against those people. I think that will help the situation to improve. That's the analogy that I make generally. But I think the more important aspect is that we have to realize that it's a free market. Customer has to make a choice. And we have to also be reasonable about like what exposure the customer can have and afford to have. I think customer will determine how the model kind of evolves. If the customer has already taken steps, you are yourself in experience realize that the center meeting attendance is going down. People are preferring a monthly installment instead of a weekly installment. So all of those things are happening. I feel that in next 2-3 years, it will be even more rapid, and there would be newer things which will be happening for the customers. Now with the use of technology, with the infrastructure, Jan Dhan, Aadhaar and mobile which is available, there can be apps that can be created. In our own microfinance experience, we have seen almost 76% of the households have smartphones. So they have the access, at least one member in the household has a smartphone. So if they can access app like a Paytm or a PhonePe, they can also access a microfinance app. And maybe you will be able to reach out to those customers well. I think the solution that everybody is looking for is how the collection mechanism works. What microfinance has done beautifully over the period of time is the collection mechanism has worked really well, which is the cash collection. But innovating stuff is happening in the sector. Now digital collection is also happening. In our own experience, 30% of our collection is entirely digital, directly coming from customer's wallet to our wallet, or customer bank to our bank. I think these innovations will keep happening, and I think in the future, definitely JLG will remain, but I think a part of it will also innovate into a newer segment of customers where customers will determine how they want to take a loan, whether it's an individual format, whether it's a smaller group, or whether it's any other format. I think that is what the customer will determine. I think what from an institution like us or many of the MFIs who are in the room or in many lenders who are there, I think we need to understand the pulse of the customer, where the market is moving. I think if we keep taking back the same standard product, we might not yield the same result that we have been seeing over the period of time. Things will evolve, and I'm very hopeful that this crisis will pass. There would be lessons, of course, would be learned. But I think the most important lesson is to be more responsible towards lending to the customer.
May I move to Mr. Natarajan? How do you think that we could deepen and go one level lower? That's one challenge. And do we know our customer enough is another. I mean, now that Sadaf has raised all these issues, do you think you know your customer enough? Yeah.
Yeah, thank you, Professor Sriram sir, and thanks everybody. Good afternoon, everyone. First of all, I think it's a very opportune time. Before I get into it's a very opportune time for us to be assembling here and then really debating, not only as a practitioners, but also with the regulator yesterday and then also the industry bodies. I mean, it's a very, it's good that we are doing this because otherwise the industry will lose its confidence, right? Okay. Sir, before I get into the future of microfinance from a customer behavior standpoint, and I want to take a step back, maybe for a minute or so, to look at the journey that we have traveled as an industry. I mean, like though Sadaf talked about it, I mean, we are today about 8.5 crore customers. We grew from 1 crore customers to 8.5 crore customers in the last 10 years, 14 to 24. And this industry was about 45,000 crores, 45,000 to 50,000 crores. Today it's about 4.5 lakh crores. I'm not taking the SSG into account. That's almost 10 times, right? Which is about 25% of the CAGR. That's on the industry construct so far, industry as a sector. Then look at what has happened in terms of the technology intervention that has happened. I mean, we used to do all manual loan processing, right? Gone are the days. We are all doing eKYC, and then there's no manual signing of the documents. It's all really e-signed. And then, like, you know, we used to disperse the cash, right? I mean, all of us remember that we were doing it. Anyway, so all this changes technology have brought, okay, has really increased the speed of the disbursement, increased the efficiency of the industry. Then third, actually, in terms of the ecosystem, I mean, we didn't have really credit bureau as effective as we have it today. I mean, we are, of course, uploading the customers' data on a daily basis, okay? That's very, very effective, right? And then we didn't have really SFBs before. I think SFBs came into being really in 2015. So I'm trying to really give a sense of, like, you know, how this industry has been mainstreamed on many, many fronts, right? And some of our colleagues got listed. I mean, that's a validation of the mainstreaming that has been done, right? And then there's a lot of M&A activity that have happened. And moreover, today, I think in 2014, I think the banking exposure industry, I'm not talking about SSG, but JLG through MFI was almost insignificant. Today, they account almost for about really 50% of the overall portfolio. So that being said, sir, so this is all good news, right? But in the process, okay, two shocks came and went, actually. I mean, 2016, demon happened. I mean, the industry quickly recovered. And then 2020, the COVID happened. Of course, you know, that was a bigger shock. Industry struggled to really cope with it. But anyway, we have moved on. And rightfully, the new regulation came. I mean, in fact, I wanted to make that mention yesterday. If it is not for the new regulation in April 2022, this industry would have been dead, actually. Okay, because nobody would have really pumped in money, given the really, like, in the interest rate constraint and also the NPA that we were really dealing with. Anyway, so I think so. The journey has been good. I think a lot of lessons have been learned, and then, like, you know, the ecosystem has been built into a robust, okay, thing. And now, how do we move forward? I think, sir, what has not changed? I mean, let's really also talk about it. And everybody, all the industry practitioners would agree with me. One thing which has not changed, which is the high-touch aspect of the microfinance, okay? I mean, I think, you know, I always think about this. You take an HDFC Bank, which is, okay, with the merger now, it's almost about 20 lakh crore loan book. Okay, they account for almost 10% of the entire credit of the country, okay? And then they manage their NPA levels much lower, okay, than a small NBFC or, you know, like, you know, even SFB, actually. How is that possible? Okay, it is because they follow something called, like, you know, I think the iTouch model on the sourcing is good, no problem. We don't complain about it, okay? But iTouch model on the collection is what is making this industry really struggle and go, okay, one crisis from the other crisis, actually, right? So I think that is not changed. I mean, I think unless we change, I mean, sir, I mean, this is what you want me to talk about. I think this aspect of really dealing with the customer behavior is something that we need to really work on. Unless we really, like, you know, work on this aspect of the micro lending. Okay, now look at the banks today. The banks have exposure to this sector, okay, and then they throw in multiple products. It's not about microfinance, they call it MBL, they call it MEL, whatever it like, and then fintechs have come into the sector. So this sector, though I mean, we have helped the customer segment enormously in the process over the last 10 years, and we helped the mainstreaming of this segments, not only for MFI, but also for fintechs and banks and everybody else, right? Okay, so now this has led to this problem. The banks may not worry too much about the credit cost, okay? I mean, on a relative basis to the extent that we would worry about, okay? So how do we do this? I think that's as an industry, group, we need to come together. But yesterday there was a survey that results shown. I think this industry is not interest rate sensitive. This industry is process sensitive. I mean, that's where I want to come in. Okay, how many of us are having the similar process in terms of underwriting? I think that's where the difference is. That's where, even if he does it better, if I don't do it better, of course, for example, the customer copies my leniency, so to speak, in terms of process and really collection thing, and then he ends up also defaulting for him, actually. I think this is one of the things, we need to work on as an industry, as we move forward. I think we need to really worry more, forget about the interest rate, fine, I mean, that will really find itself in its own really discovery process. But I think the process uniformity and also process robustness is what's going to make this sector very, very, sustainable from a long-term perspective. That's point number one, sir, okay? Point number two, I think from the industry, from the sector construct standpoint, okay, I mean, somebody mentioned in the earlier session, I mean, I also agree to that view. We are seeing the, beginning of the end in terms of the JLG concept as a concept.
Yeah, we talked about it, yeah.
Sorry?
We talked about it, yeah.
Yeah. So I think, I think this is going to go, I'm talking about, I'm taking a 5 to 10 years view, actually, right? So this industry will, go into more like, it'll still be called microfinance loan and all of that. But it will be more and more like an individual loan. That's on the thing. The third on the regulatory standpoint. I think one of the constraints that has been really put on the MFI organizations is, the qualifying assets of 75%, right? Okay. Now this is an unsecured product, and then being an unsecured product, it has its own inherent risks, as we talked about. But I think we don't have the headroom to diversify the products. Okay, I think that's one thing I see from a 5 to 10 year perspective. I think regulator probably we have to push regulator, and also regulator also will find it really meaningful to really deregulate the really, if not fully, at least to 50% of the qualifying assets, right?
Thank you. I think we can come back to you. And let's finish around. How many more points do you have?
No, it's fine. I mean, I have 2 more points. We can cover it.
Sure.
Okay. Thank
Mr.
you.
Singh, if I can come to you, Mr. Singh. How do you look at, ultimately, if you look at the SHG bank linkage model, the public sector banks and the banking system was a pioneer in that inclusion. As far as the MFI model is concerned, you have been sort of doing bulk lending and so on. Going forward, how do you look at this space? As a bank, would you be directly looking at it, or would you looking at it through an agency model? How do you look at the future?
2 or 3 perspectives to your question that come to my mind. As of now, all public sector banks, they are having twin models, or rather we can call it hybrid model. We are directly lending to individuals groups, one way. Another, we are financing to NBFCs, NBFC MFIs for on lending towards this microfinance sector. The 2 issues which are coming at this juncture with us, they are from the regulator's perspective as well as from our perspectives also. When we on lend to NBFCs, RBI has issued some regulatory guidelines which either we were not being following or they were not being insisting upon, because what I see about the RBI regulatory framework, first they try to develop the system, they allow a growth to a certain extent. When it grows to that level, then some system structures they want to build in for the proper growth of that sector, and so that it doesn't result into any unforeseen eventualities for the system as a whole. And in MFI sector, we have seen last 2 or 3 such eventualities in the past because of the regulatory hiccups here and there, or the regulatory gaps, what we can call it. So direct lending, we will continue to do. All banks will continue to do as part of their priority sector obligation, as well as we have our brick and mortar models. We have also tied up with fintechs, which was not the case till 5 or 6 years back. There, our cost of operations are much higher. Now we have also onboarded digital channels, technology partners, so as to create a distribution channel which is much more efficient in terms of cost and turnaround time. Then comes this model of on-lending to NBFCs, where our majority of the portfolio is there. But the issue here is coming is RBI now, Paras is saying that whatever you are giving for NBFC onward lending, that should have a co-terminus clause. That is a bigger issue. Now what is happening, supposing we have given 1,000 crores to any NBFC, they lend it, after 6 months, 3 months, they sell it as a pool buyout. Those resources, they are again churning. The resource which I had given them for 2 or 3 years, they are rotating it 5 or 6 times, whereas the intent of the RBI has been that it should be done only once. If it is co-terminus, it can be only once. So that is the issue which banks have to look into, as well as the NBFCs also have to fall in line, because we were lending to these sectors because it was a priority obligation for us. And once this co-terminus agreement goes, or the clause goes away, then it will not be a priority sector. So we have to look into that issue. And so far as the scope is concerned, still we see that close to 30 to 40%, whether it is agriculture laborers or it is MSME, they are getting still the finance from informal sectors. So there is tremendous scope. At least if you are going at the growth rate of 10 to 15%, next 10 years ahead what we are talking about, there is tremendous scope available to us in terms of the opportunities, in terms of employment, in terms of production. All those things can be capitalized upon, and we must be ready for that. This transitory phase was RBI has done. It has just, what comes to my mind is maintaining the system stability. They are at the same time promoting innovation, but not disruptive to the extent they are going to play with the stability of the system. So that we have to monitor, sir.
Thank you. Thank you. Madhav, if I can come to you. As an international bank, what is your, how do you look at the sector? One. Two, going forward, let's say in the next 10 years, you know, as you can see, the regulator has been tightening the priority sector lending norms even for banks. I mean, less than 20 branches also you have some priority sector lending obligations. More than 20, of course, you are almost like an Indian bank. So how do you see the role of private sector banks in this area? And is this an area of interest to the international banks at all?
Thanks. At the outset, good afternoon, everyone. I would like to thank Sa-Dhan and in particular Gigi for having invited me here. In fact, one of the first questions which came up in my mind was, why me? And one of the panelists also asked me, why are you here? So, bhai, main hu yahan pe, but it's not that BBK is starting off a microfinance unit or something. We are not. But we do have interest in this sector. And like Professor rightly said, it is the priority sector lending norms which is probably driving our interest at this point in time. I'll take a step back. Many years back, Professor C.K. Prahlad had written a book, Fortune at the Bottom of the Pyramid. And if actually one goes through that book, he cites many global examples and some examples from India too, on how institutions which have come out right from the grassroots have really done well. Some of the examples which he quoted are no longer in existence, but some are actually really doing well. One of the companies which I was tracking was Jaipur Rugs, and they're really doing well. It's an internationally known name now. So definitely, yes, there is a profit to be made at the bottom of the pyramid. Now, also when we look at the track record, and some of my panelists had alluded what happened to the sector, but there were some things which also didn't go well for the sector. And I'm talking of prior to demo and prior to the COVID. I think, hence, now what we are doing is we are looking at from a ESG, if I put the ESG lens, I think the G part of it is what is critical when, you know, banks like us look at the sector. So we had to do a lot of heavy lifting in terms of educating our, the credit people on why we want to get into the sector. because we have options. As foreign banks, we have options of either lending or buying the more easier options to buy a PSLC. But my personal take, I'm a firm believer that if there's a well-rated microfinance institution, there is an opportunity for a bank like us also to get a higher rate, because typically otherwise I'm targeting a corporate which is A-rated and above, and they're very sensitive to rates. I get slightly better rates than traditional corporates when I lend to microfinance institution. So that is my interest, why I would be sort of lending here. So what's worrying us right now is the G aspect. So we do look at the governance. When I talk, it's quite broad-based. It's a governance like how the company itself is run, plus other things which are coming on and off. Historically, if you look at not just in India, but globally, the rates have always been an issue. We have seen an example of Mexico where the microfinance institutions were, they had gone berserk and they were quoting very high rates, and the industry had to sort of recoup from that. We have also seen that happening in Andhra Pradesh at some point in time, and some other markets too. I think there needs to be some sensitization on rates. One of the earlier speakers said that rates don't matter, but I think rates do matter. It has to be a right point where it makes commercial sense for the end borrower too. The governance aspect, again, we have been hearing about the lending practices of certain institutions. I think institutions like Sa-Dhan, which is a SRO, would bring in some discipline along with RBI. That's my take on it. So at this point in time, we do have exposures, and we plan to continue to do that. Also, what I'm seeing is microfinance institutions are not just relying on the PSL aspect for their funding needs. In fact, I think earlier in June, there was a press article that more than 3,500 crores was raised as ECBs by several microfinance institutions. And that's definitely not driven by a PSL consideration. It's pure commercial consideration. And it's a win-win situation for both the lender as well as the off-taker. The MFI institutions are able to diversify their fund base, and institutions abroad are also looking for investing in good quality Indian debt. And I think that's where, again, if the G aspect is taken care of, I think the sector will open up much more opportunities of getting overseas funds coming into this place. So at this point in time, I think some of the institutions are doing a wait and watch because of the current scenario. But if I take a longer term perspective, I think people are quite positive about this particular sector. And with what our Prime Minister has aspired for the country, if we have to become a Viksit Bharat, it has to be the last person there has to be also be brought up. And if that does not happen, our country does not become. So I think there's a clear roadmap planned, and if the way the guardrails are being placed by the SRO and by the regulator, I think that will give a lot of confidence. But my own recommendation for the institutions here is please look at the G part. E and S we can speak later. Thank you.
Okay, thanks. Govind, I've reserved the last for you because your career has been a little bit of a roller coaster. I mean, I'm not saying you went up and down. I'm saying you started with ICICI Bank, and then you set up your own MFI, and then moved into a SFB, right? So you have seen the perspective of a large universal bank, a small MFI, and then a small finance bank, and possibly, hopefully, I don't know if you're going to apply for a universal bank license at some point in time on the other. But I guess that seems to be the general trajectory going forward. So, how has life changed from being an MFI to an SFB? Is it better? Is it worse? Would you rather not have taken the decision? That's one. Because now you're dealing with both sides of the balance sheet. Otherwise, you're dealing with only one side of the client balance sheet, right? That's, yeah. Basically, I'll stop there. I have more questions for Natarajan also. I'll come back in the second round. I hope we have some time, yeah. Yeah.
Hello?
Yeah.
Thanks, Professor. Yeah. So, but before I respond to you, I have two, three, you can say, responses to some of our colleagues on this panel. One is that I don't think that JLG is there for 5, 7 years or 10 years. JLG is bound to be there for long time, much more than this. For a simple reason, even as an NBFC MFI, as an player from that field, My sense is giving a 10,000 rupee, 20,000 rupee loan for income generation with a community-based approach for a family. I think that model is very, very strong model, and you don't get that type of social collateral in any other model. So I think that is there for a long time to come. The difference that has happened during last decade or so now, or especially during last 3, 4, 5 years, is that the ticket size have gone up, and because of that, the JLG relevance has gone down. But it is not, JLG is not relevant. It is not relevant for 1 lakh rupee or 1.5 lakh rupee loan. But it's extremely relevant for 10,000 rupee, 20,000 rupee loan, 25,000 rupee loan. And in Indian context, I mean, we don't have data, government data may be little different, but my sense is still 20 to 40% people are still require the hardcore microfinance loan. So it is still there. Second, I have a little disconnect on the, when we say fintech as a microfinance institution. So I'm a banker, but with all due respect, the way we thought of microfinance, the way even Grameen must have thought of microfinance around 50 years back, it was a community-based approach, it was a family-based approach, and it was for income generation for the entire family. I think hardcore fintech doesn't work that way, and that may be one of the reasons why we are seeing a lot of heat also. I mean, that is one of the reasons, not the only reason. So my sense is, if you are looking at the hardcore microfinance, it is for income generation, and it is with a community-based approach. If you have a community-based approach, then there has to be physical touch with the customer, with the person whom we are dealing with. If there is absolutely no physical touch, we have to only digital, I think that is not microfinance we are talking of. I don't know how people would like to respond in this room. And third, as an SFB, in fact, we were NBFC MFI for almost 8.5 years. Then for last more than 7 years, we are a bank now. We do fund, we do lend to, as a term loans or for on lending to NBFCs as well. But we have a very firm belief that we are a hardcore practitioner, we are a hardcore executor, and that we are a hardcore executor, and we are there for execution. And the retail part of getting sourcing to entire process of microfinance or JLG is a hardcore thing for us. For at least for foreseeable future, certainly it will be integral part of whatever Utkarsh as an SFB does. Having said so, life does change, or has changed post becoming a bank. It has happened both sides. One is that from the customer side, now there are more and more opportunity for the customers also in terms of vertical as well as horizontal. They can get multiple type of products from bank. We can always say it has not reached the level which we would have thought, or the RBI would have thought, but it takes its own time. Now it is 7-8 years, and we are seeing big significant changes. I think many of the SFBs have got well diversified portfolio now. They are MFI portfolio, who are NBFC MFI earlier. It may range from 30-40% to 50-60%. They have got non-JLG book also. For the customer, they have the one is the saving, recurring deposit, insurance type of products, and similarly they can get multiple type of other loan products also. If the client is maturing, they can get individual lending now, 1 lakh, 2 lakh, 3 lakh, 4 lakh. Even they can go for other higher unsecured lending. They can go for LAP. All type of products are possible. So I think very important from the customer side that they can get all. It is very important for the bank side also that we can serve the customer for all the purposes. Important part, we have to manage liability a little differently now, because it's a public deposit what we get. But that is one of the positive for a bank. In long run, as I mentioned, banks are for centuries. It takes really decades to reach a certain level for a bank. So certainly, we'll get benefit of in terms of widespread deposit base, which will be public deposit. The cost of fund will certainly go down. Cost of delivery will certainly go down. So it is going to, and the certainty of getting resources, getting funding is certainly there. So I think as a bank, immediately, and sir also mentioned about the governance part. I think the governance for banks is much higher, from the regulator side also, which is expected. It is much higher. So I think it also takes its own time in technology, in terms of governance, in terms of compliances. I think that passage we have gone through. So my sense is, if you look at a horizon of 10 to 15 years time, I think SFB space is much better for even for running as an MFI as a large vertical, and those are our plans. And it does certainly gives us a better scale, certainly gives us better opportunity for the client, and certainly it is much better for the client also. So I think that is how we look at, and we see a lot of good future. Whether we become universal bank or not, I think that may not have any impact as far as our thought process toward the microfinance and related business are concerned. We'll be there for all time to come, sir. Thank you.
So I can get back to Natarajan. Sorry, I cut you off at that time, so I was conscious of the time. So we can get back, you can make one or two additional points. In addition, let me also slip in one more question along with that. Would you, I mean, when you said that this new regulatory framework is good, it's a common regulatory framework for uncommon institutions. Do you think it's really good? I mean, in the sense that banks are different institutions compared to MFIs. Their work, cost structure is different, their administrative structure is different, their technology is different, and so on. So, do you think it's still a good idea to have a common regulation? That's the additional question in addition to the points.
Okay. No, the two additional points that I wanted to cover from a futuristic standpoint is, this segment will continue to grow at minimum 20% a year. If the economy grows at about 7.5%, the regular overall credit grows at about twice of that. I mean, this will grow at probably about 2.5, 3 times of that actually, right? So from a demand structure, there is no issue with it, right? Okay. And then, so where do we see the industry? I mean, today it's about 4.5 crore, okay? I mean, if it grows at 20% a year, in 5 years it doubles, okay? In 10 years, it really doubles again. So, like, we are looking at about 15 lakh crore kind of a really, like, the MFI industry as we move forward, okay? The other aspect that I look at is, so from a growth standpoint, I think there is no problem with it, but how do we capture that growth, okay, in the most sustainable and risk-oriented manner? I mean, that's where, like, I think all the discussions, and that's where the institution will have to continually evolve. The sector has to continuously evolve. That's one. The other aspect I wanted to, in fact, I also made this point in the morning. I think this point is also for Gigi as we move forward. I think since the microfinance has been mainstreamed from a financial inclusion standpoint, but I think it has to be mainstreamed on the distribution, okay, reach for the country for all of the programs, actually. I think the collaborating with the government and government agencies, okay, I think, you brought in so many government agencies, Ministry of Rural Development, like, okay, the social welfare, you brought in all the government agencies, but I think this is a vehicle and platform that is there, okay, for the government to really take all the program they run to really make it very, very inclusive. One example, right? The Prime Minister's this insurance program for about up to 5 lakhs. I don't know the penetration right now. I think, if you give it to MFI, okay, and then in 12 months time, you will have the penetration of 80%. I have no doubt in really saying that. I think, so I see that microfinance evolving, okay, as a distribution really mechanism for really, you have really DBT, that's fine, for the direct benefit transfer, but like, how do you take the programs to really, to the rural economy, to the rural thing? So I see, interesting time, boss, as we move forward, but how do we make this industry interesting for us from a sustainability standpoint, from a profitability standpoint, from a viability standpoint? I think that's where a lot of work needs to be done. That's where a lot of coordination needs to happen. One more point I also mentioned this yesterday to Gigi. You see, you talked about the regulation, Sriram sir. I think regulation is a leveler. In my view, it's a leveler. I think it's very, very important we have a uniform regulation. But I think, do we implement the regulation uniformly across? That's where the problem is actually right now, right? And that's where we want really SRO to be very, very active to act as an extension of the regulating body, so to speak. That's where you are as of today. But I think, you can really take examples from the other cartel. I was just quoting OPEC as a cartel. I don't want to call ourselves a cartelized kind of really industry, but that's what it is from a process standpoint, not from a interest rate or whatever standpoint. I think from a process standpoint, we need to become like a cartel, right? Okay. We should not allow, okay, one institution or multiple institutions really to follow their own process and then like end up really damaging the entire industry. I use the example of OPEC, for example. I think OPEC is the most long-standing really cartels in the world, one of the cartels in the world, because nobody can raise the production of oil, okay, and nobody can really like fix the price because they meet. This is the most successful thing, and I have local other kind of really setups, but it's a very, very localized kind of a setup that we have. But I think, one message, boss, I want to really give to everybody is, that's also for us as an industry is, how do we really like, have a centralized, uniform process, okay, that doesn't build in the risk for the industry. I think, I mean, at the end of the day, we are all really risk managers. We are not lenders. We are all risk managers first, and then, like, we happen to be in really lending business, right? So I think those are some of the additional thoughts I wanted to add. Thank you.
Thanks a lot. Thanks a lot. Sadaf, I have a follow-up question. I mean, I also would remind you that you wear Sa-Dhan Vice Chair, co-chair hat as well. Why is it that this crisis happens only in the inclusive finance sector or microfinance sector? Why is it that we have never heard of a crisis of over-lending in the informal sector? Or in the formal sector when microfinance was not there. So what's so peculiar about this sector that it sort of, every 2 or 3 years there is, or 3-4 years there is something that comes up? I mean, I know that this is catching you unawares, but I'm hoping that there'll be some insight from this. And of course, that will help us to understand future-proofing of these crises, which are not externally driven. Politically driven, that's fine. What the crisis which is internally driven?
No, Professor, that's a very interesting question, actually. I think there are two aspects to it. One is like you regulate the ones who wants to be regulated. So I think the good part about the industry is that people are very, very conscious of regulation. I think this is one industry. I think even Natarajan said that we need to operate as a cartel, but this is one industry where I have seen that there is a lot of camaraderie and lot of cohesiveness, I would say. I'm talking about the days before Andhra. Maybe we were a little bit more scattered and living in our silos, but still knowledge sharing was very easy. And I think Govind sir can tell more about it. He has seen the whole journey, but I think people generally know that they sink and swim together. So I think from that perspective, people kind of follow the regulation. SRO plays a role. SRO came into existence also because we thought that there has to be an association for common good. Why we don't hear about crisis outside the microfinance or in the unorganized segment? Because I think 2-3 reasons. We all know the practices that the unorganized segment follows. Usually a very active journalist will bring out those issues. But normally I think those issues remain at the fringe level. But I think media gets kind of a news when it's about the sector. It is not only about one player at one remote location, but there are, I think, issues there as well in the unregulated segment. There are kind of issues, and I think RBI is playing a very important role, trying to bring more and more the borrowers at the bottom of the pyramid to formal segment. I think that is the role which microfinance needs to play. And which is what we are doing. I think getting people out of the clutches of the informal segment. I can tell you an example. There is a concept in Kerala of meter loan. And I'm sure many people will know this. It is like a vegetable vendor takes 1,000 rupees in the morning. 100 rupees is cut from the time it is given. So actually 900 rupees is given to them. And by the end of the day, by 5 o'clock, he has to give back that 1,000 rupees plus the interest. And if you don't pay, by that time, there is a 50 rupees penalty per hour. So you can imagine and calculate the amount of interest. These practices are there, and people are aware. It's only that they are not at a very large scale. That's why they don't get so much of limelight or so much of reporting. But that is there. I think the importance that microfinance has and all of us has collectively and a responsibility is that we need to get the customer out of this and get into a formal segment of lending. I think a lot of progress have been made. When I started off microfinance, the lending rates were in the range of 36 to 40%. I think today, by and large, if you look at across the industry, the average rate would be around 24%. The operating cost at that point of time was around 12.5% to 15%. That operating cost on an average is around 6.5%. For a more efficient MFI, it's even lesser than that, in the range of 5%. So I think a lot of innovation has happened. I think it's easy to blame microfinance for a lot of what is happening, but a lot of innovation, lot of access to credit has been created. And it was heartening to hear, I think, Sharma ji yesterday from RBI, Jyot Prakash Sharma, he said that microfinance has created this reach for like 8.5 crore households have been able to kind of get access to credit. Now what we need to do is to reach to the next level. I think microfinance also need to change from only credit to credit plus. So you need to think holistically at a household level, what is that household need? Whether they need a crop insurance, whether they need a natural calamity insurance, whether they need any sort of a medical kind of an insurance, any sort of a medical consultancy facility, whatever microfinance can create because of the reach. I think that is what should be the thought process. I think as long as we work with the household unit and for betterment of the unit, I think the sector will be remaining relevant and will be helping the segment that we are serving to come up. Yeah.
Thank you. Govind, I have a follow-up on your this thing. You said that JLG will stay, and you mentioned other products. Now, one question is, will JLG stay the way it was, which is social collateral, which you talked about? When the loan amounts get bigger and there are individual aspirations and your group as a whole does not grow commonly, one member grows faster than the other. Would the social collateral still work? That's one. Second, if you're transitioning into individual loans, is there some fundamental changes that you need to do in how you look at the assessment process and so on? And are we, as a sector, not you as Utkarsh, are we moving towards that direction, or are we sort of very slow in adapting to individual assessments? Because that would mean cash flow assessments and things like that. So.
When I say JLG is bound to stay there, I also qualified that it is for the smaller ticket loans.
Right.
The moment ticket size goes up, then the social collateral become very weak. So social collateral became weak also during COVID period and during demon period also, demon and COVID period. These two incidences. But I think everyone is trying to go back to that original level where center meetings used to be a norm. And I can say that, it has not completely gone away. Even there may be people will say 30%, people will say 70%. So center meetings are there, it is not there at all. And my sense is for smaller ticket, it will be the way of doing it. And still, if it is, people have to contribute 20 rupees, 25 rupees, 30 rupees, they won't mind it. But if it is 500 rupees to be contributed for a longer period, that won't happen. So, so that is why I say JLG. And one more important thing, when it is new to credit, I think JLG is the best model. I'm talking the segment we are talking of. The BPL segment we are talking of. Normal coursemen, no one will lend to these people. I mean, with all due respect, whatever we say, whether we are Universal Bank, SFB, NBFC, MFI, whatever we are, other than hardcore fintech, I don't know, even they won't have data about those people. So when we go to communities, when we go to bastis in large cities, when we go to bastis in the villages, we understand who can do all these things and bring them together. If you look at the entire process of how microfinance is done, how JLG is done, right from projection meeting to village survey to group formation to all that stuff, that's a very, very regimented process. In fact, if you do that part, nothing can go wrong. And especially it is very important for the people who are new to credit in that segment. So I still feel that in days ahead, in decades ahead also, it will be very relevant. It is certainly relevant. As per the higher ticket loans are concerned, certainly when your risks are higher, there is no group collateral. Even if it is a weaker one, it is not there at all. I think you have to increase or improve your level of underwriting manifold, 3, 4, 5 times in fact. And I think there are a lot of data available, especially most of the people are having, now they are not new to credit. So they have, at least they have JLG loans in fact. So some credit history is available, CIBIL score is available. So my sense is, you have to strengthen your underwriting processes and you will be able to go there. In fact, they are much, much better than the hardcore unsecured loan, just like that. If you do mature customers of microfinance, mature customer of JLG, these are much better in terms of from the portfolio quality angle also. If you're asking me how the journey has been, my sense is if I'm looking last 2-3 years, things are, moving pretty fast. That was not the case. If you look at in 10 years back, I think people are just saying, we are just converting a group customer to an individual customer. But we are not seeing the same way. I think there are proper underwriting processes. Right. Even there are proper collection processes. And people are opening their accounts. They are ensuring that at least in this model, people are having, auto debit mandates. Those type of things are there. So my sense is, yes, it is picking up fast. And certainly you'll see a much more, as a part of microfinance, the share of individual lending will certainly go up significantly in days ahead. Only one thing, because you have given me mic, I want to just respond to two more things.
Please.
Again, Natarajan sir, I have a strong view on this, comparison with these petrol, cartel type of things. I think it's a very strong association. As I mentioned, this is a community-based approach, and that is how the everything happened. In fact, in the history of Indian history, the credit bureau, which was thought is the most difficult thing for microfinance. We all thought that in 2007, 8, 9, it is just impossible to have a credit bureau for so informal sector. And I think we took around 6 to 9 months time with the help of Highmark, and this is one of the most robust credit bureau. When I say robust means, it is the most disciplined credit bureau also. I think everyone submits data on a weekly basis. And even with due respect, even when you look at outside microfinance, it is not happening. Second, when we talk of, the way petrol actually, what they do, they actually control prices only. They don't control anything else. Sir, only one second. But what I expect when we talk of Sa-Dhan and MFin, I think they should control the compliance part, the governance part, not the process part, because everyone should have their own process. Because I might be less efficient, you can be more efficient in fact. Why should you go by my process? But the target is the same, so I think governance, risk management, compliance, it is what SRO should ensure that these are very, very strong, and especially the type of growth numbers you mentioned. Yes, I also believe that those are the type of growth numbers we'll certainly see in the microfinance. So it's all the more important when we have come mainstream. One way we have done a lot of, in terms of credit bureau technology, we have done a lot of things, but I think similar way we have not done the two part. One is the compliance and other part, and second, in fact, in morning I was talking to one of my seniors that what has happened during last few years, the credit growth has actually gone very fast, but the credit plus what we mentioned has not gone with the same pace. The other than credit part, those have not gone at the same pace. I think it is the right time that we should look at the other aspects also. The non-credit part in terms of financial services and the non-financial services. I think that's also equally important when you are looking forward from
I will respond on your behalf. I'll respond on your behalf. Hang on. No, I'll respond on your behalf. Allow me, because it's easier for me to abstract it. Because otherwise we get sentimental about it. See, Govind, when Mr. Natarajan said OPEC, I don't think it is to be replicated just like that, or processes, even when he mentioned processes. What the conceptual this thing is, we sink together or we sail together, and therefore, what is it that we want to do in our mutual interest together? Basically, that's the point that he was trying to make. I mean, that's... Well, I mean, the question is it working as strongly as OPEC is working? That's the question.
I'll just quote one example, just 30 seconds. Probably we are only one of the few companies where we record our credit assessment process 100%. And we keep that record for about really during the duration of the loan, right? So we went back to one of the customers who didn't pay us, right? He said, sir, you're checking everything, fine. Other companies, like, why did you take more loans? Other company didn't check anything, they gave us loans. So we took loans, so he's unable to pay, okay, any one of them actually.
Well, yeah.
So what we are saying, I mean, I mean, the OPEC example is just a conceptual, really, like, example, not a real example. We don't want to control the pricing. Pricing we don't want to control. But we want to be really copying the best practices, okay, for the safety of everybody. That's exactly what I mean.
Thank you. I have one last question for Mr. Singh. One thing that the public sector banks did very well was on the Jan Dhan Yojana stuff. As a campaign, you almost reached the type of penetration that microfinance and SHG together have reached. Do you envisage asset side strategy also from the banking system of trying to reach these customers. I mean, because overdraft and Jan Dhan has not picked up at all. So you have an entry into every poor household, but do you want to leverage it as a banking system?
Yeah, certainly two things have happened. Number one, whatever we talked of the financial inclusion, it has just linked to the saving linkage. It has not percolated beyond that. But if you are thinking of that financial inclusion, it has the three components. If financial inclusion has to be complete, it is bank linkage with savings account, then it has to be credit linkage, and above that, it has to be some social security also, because what happens if you see to that sector, they are very susceptible. For 5 or 10 years of their hard work, they are just reaching over the poverty line or their sustenance level, but if something goes wrong in the family, either because of natural calamity or something else, accident or anything can happen, they go beyond that. So we have to sensitize. And one of the participants has also said the penetration of the social security schemes, that has to be taken to that level. And one more thing which is not coming to the financial sector, but outside the financial sector, incidentally, MediBuddy was giving the presentation. That is one of the starting fact that because of the medical health issues, close to 5 to 10 crores of families every year who have migrated above the poverty line or above their sustenance level, they are coming down. Because of that, if the principal bread earner is having any serious issue or any of the family members having serious issue, then priority becomes to take care of that, not to repay the loans.
Right.
So that has to be taken in a proper perspective. And one more thing where I think in the initial stages, whether it is JLG or it is SHG concept, one more thing has to be done for the financial literacy. These poorer people who are new to the bank or in the initial stages, when they are migrating from group lending to individual lending, they are forgetting the difference between income and loan. Whatever is coming to them, they treat it as an income. And that consequently happens, they take 3 or 4 loans. They are taking that, these loans we are taking, and we will keep on repaying like that. So there has to be some discipline on the part. Rather, we should be more disciplined, the lender should be more disciplined in getting them financial education. And if we can do that, a lot of things can be done for improving their lot.
Thanks a lot. Thanks. Madhav, would you like to have a last word?
Yeah, thanks, Professor. When I said the lens of ESG, I think S was already addressed by the concept itself, and G was an area which I said that I had certain concerns, but happy to note that the fellow speakers have calmed my nerves on that. The last piece which I would like Sa-Dhan and possibly all the members here is on the E side, which is quite critical, E both from a climate change and sustainability perspective. And that's something which is still, we speak a lot in conferences, but nothing is happening down the line. I personally I'm looking after the ESG piece at IBA. We have been trying to do capacity building, etc. I think that's something which I would request Sa-Dhan also to sort of collaborate with us, where we can take it down to the last mile connectivity part of it. Thank you.
Thank you very much. I think we're exactly out of time. Okay, you're suggesting an audience question. Yeah, we'll take one audience question. Yes, Singh sir.
I'm Satnam Singh, former CMD Power Finance Corporation, and currently strategic partner with our investment banker called Aurum Equity Partners. Given the fact that 10 or maybe 15 people in the MFI sector are dominant players, catering to 75% to 90% of the lending requirements. And 10 to 15 companies are catering to 75% to 90% of the lending requirements. And second fact is that these players have a market share other than the credit access Grameen, which has 15%. The other players have a market share of 6 to 8%. And also given the fact that cost to income ratio is going up for most of the people, most of the companies, my question is it time that further consolidation will take place in this industry. Meaning thereby, either based on geography, because some of the people may be able to manage cost to income ratio better than others. So is it time that the ones who are not able to manage, they are potential clients for the ones who are able to manage?
Sadaf, would you like to go at it?
Yeah, sure. I think if you look at currently, most of the larger players that you're talking about are having a capital adequacy of more than 25% and have the capacity to raise more money as well. In the crisis situation, we have seen always like the ones who are well capitalized, they continue to kind of get bank funding and continue to survive. The smaller ones tend to kind of have a little bit of a challenge. That is an opportunity to acquire, and we have seen this. Many transactions have been announced. Banks have taken over microfinance companies, and microfinance NBFCs with the other NBFCs have merged. So definitely that is a possibility. It will happen. I think that is also the intention of the regulator in a sense that the microfinance institutions who are sustainable and bigger continues to kind of remain, and people who are doing good work will continue to get support and continue to get funds and money, and they will continue to grow. I may add one more thing. I think every crisis in microfinance has really made the sector more resilient and more stronger. And I can tell you from Andhra Pradesh crisis, we came out, we had industry SROs, we have credit bureau system, we had much more cohesiveness. Second crisis was a demon. There was 100% cash disbursement happening before that. After that, almost 90-95% everybody is doing direct bank disbursement. And now the collection is also moving. We had Kerala floods and other things. I think innovation came out from there, natural calamity insurance. So I'm leaving here with a thought of positiveness that this crisis will also bring out something positive, some new innovation, and definitely sector would be much stronger and much better in future.
Thank you very much. We can have one last question. Yes,
thank you. My name is Rahul Tripathi. I'm the
Professor.
Good.
I would like to ask one question to the bankers. Say, of late, regulator, that is RBI, has been insisting that unsecured loans should be reduced, and particularly the personal loans in the banks have been asked to reduce, and otherwise you make a provision of 125%. But later on it was subsequently extended to microfinance companies, resulting in non-availability of the funds to this, especially small and medium-sized MFIs or starved of funds. See, in the process, how MFIs will reach out to the unreached segment of the people. There are many areas which are yet to be covered by MFI sector. Please, bankers should answer to this question.
Thank you, Mr. Gadiappan. I think this is a regulatory concern that you have raised. I think Sa-Dhan will pick it up with RBI, and at some point in time, we'll get it resolved. Hopefully, it will get resolved. Because, I mean, I don't think the panel has an answer for a regulatory question. So, can we go on to the next question, please?
Thank you. My name is Rahul Tripathi. I'm the CPO for Dwara KGFS. As a product officer, one thing that clouds my mind is the future, how the customer is going to behave. And cohesion, some of the panelists did cover about cohesion going forward. But from Professor, for you and practitioners as well, have you seen any research or have you experienced how the cohesion amongst group is changing? We live in a very fragmented world now, and the digital technology is definitely adding to it. People are less connected with each other. We talk less with each other. So why would group cohesion, or how will it pan out in times to come? That's something that...
I think Govind has already addressed that question in the sense that when the transaction ticket sizes are small, there's much more at stake, and therefore the cohesion works. When the transaction ticket sizes become larger, then your personal stakes are very high, so therefore you will not stand guarantee to anybody else. Similarly, group also, when it's a small group, cohesion works. As the group becomes larger, the coefficient stops working. Now, what is that magic number and where do you cross the line? We don't know. But we know when we have crossed the line, right? That this is not going fine. Okay. Yeah. Yeah, that's the point that Govind made. At entry point, we need cohesion, and beyond that, it will be an individual.
Sir, one thing can be added to that. So long as you are thinking it is economically viable for you or beneficial for you. The moment you think the risk reward is not in your favor, supposing a small loan is there, the risk reward is in your favor. Because if you are going to the bank, bank will not lend you, microfinance institution will not lend you. You can go in a group. But if you say that my liability is going to increase 10 times, then perhaps you may stay away from that. So that has to be one of the considerations in that group functioning.
Okay, I think we are time up. Thanks a lot. It's been a wonderful afternoon. Thank you, my fellow panelists, all of you, for these insightful comments. Thank you. Yeah.
Thank you so much, sir, for that very engaging session. Ladies and gentlemen, may I now invite on stage member Sa-Dhan, Shri Ajay Kapoorji, and also may I invite CEO Sa-Dhan, Gigi Maman sir, to kindly join us onto the stage to present a memento and a shawl to our panelists of the session. Thank you so much for a very engaging session, sir. Thank you so much, honorable speakers. Before that, we have a small book presentation which is being shared amongst the speakers of the session. We now present a memento to Honorable Moderator of the session. Thank you so much, Professor M.S. Sriram. May we now present a memento to Mr. Madhav Nair. Thank you so much, sir. We thank Mr. S.B. Singh. Thank you so much, sir. We now present a shawl and a memento to Mr. Govind Singh. Thank you so much, sir. We now present a memento and a shawl to Mr. Sadaf Sayeed. Thank you so much. And a big thank you to Mr. Natarajan. Thank you so much, sir, for being with us this evening, presenting a shawl and a memento. We quickly take this moment to capture it in our lenses, so may I request all the panelists and Gigi sir also to kindly step forward for a group photograph. Ladies and gentlemen, with that, we conclude our session on Microfinance 2034, the future of microfinance in India. A quick reminder regarding the Microfinance directory. May I request you all to kindly collect the Microfinance directory in case you haven't as yet from the Kalinga Hall. Once again, a reminder regarding the Microfinance directory, which is available at the Kalinga Hall. Kindly collect your copy. Ladies and gentlemen, we now will proceed with the valedictory session. Give us exactly a moment to set up the head table. Kindly stay with us. Thank you so much for your patience.